Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, and in today's video, I'm watching a video right now of Bridgewater co-CIO, and the stuff that he's saying right now in the markets right now, guys, is just, I just wanted to bring it to your attention and share with you what I'm seeing through there, and something that you're going to be really interesting about, you know, the interesting stuff that I'm learning about the duration of what the effect of the virus is likely to have on the economy and how long that's going to be, and how long the government stimulus is sufficient for. You're going to absolutely just love what I'm going to share with you there. Now, guys, one thing that I do see is I've always seen technically, if I go to my Dow Jones chart and I open this right up to large, and if I go to, say, my monthly charts through here, or even my weekly charts through here, if I take this off here, I've always said that I truly believe we're probably likely, me technically wise anyway, it seems like to me we're building some sort of massive head and shoulder. And I've always said that we're probably going to drop down to here, come back up to here, drop down to here, come back up to here, you know, do something like a major head and shoulder. And then maybe into 2021 and maybe even into 2022, we start to see something like that. Now, not exactly like that, guys. No market will, it probably won't go like that, right? It'll go down a little bit, come up a little bit, come, you know, something like that, right? That's how we're probably likely to see. But I've always believed, guys, that if I look at this, I believe that this has always been one big, massive head and shoulder pattern. Pretty ugly head and shoulder pattern. So I've always believed that, because that's what I'm seeing from the markets there, and it's really interesting that, you know, that I'm seeing that through there, guys. But before I get into the video, guys, just make sure you go down to johnsflashstyle.com. You can get this whole trading course here. It's a breakthrough trading course. If you're struggling with the trading course right now, if you're struggling with the trading right now, guys, go to johnsflashstyle.com. You've got literally 10 videos there, 11 videos there, walk you through everything. Chart reading strategies, couple of trading systems, the biggest mistakes you're making right now. Go to johnsflashstyle.com and actually get that to really help you out. Now, let me just bring this video up through here, guys, and I want to share something with you. All right, let me bring this over here, guys, and let me actually listen to this section of the video here. It's Bridgewater co-CIO principle, and on the global markets here. It was just recently done. Listen to this little section here, and I'll come back.
By and large, successful so far. The big question about that is that while we're used to thinking in terms of growth rates, which is changes in output over short periods of time, the big thing that's happening now to be thinking about is the collapse in income and the level of income that exists. Because the low level of income that exists will be with us for a while in some substantial degree, which means lower profits, lower spending, and so forth. What also means lower cash flow. And for those that are in, you know, kind of treading on thin ice with respect to their financial position, the longer that this goes on, the more difficult it becomes for them. And so you have these two pressures really operating at the same time. You have the collapse in income, which is collapsing cash flows, which will affect those that are most vulnerable to the collapse in cash flows. And you have the expansion of liquidity by the central bank going into assets, but may not be sufficient to cover those cash flows. And the programs to date are by and large sufficient to cover the income gap for about 3 or 4 months, starting from April. So we're really talking about an amount of money that gets you through the summer. And the problem then is that we're talking about the virus, which has a time frame of probably 18 to 24 months. And so I refer to that as a duration mismatch, essentially the time frame of the virus impact on spending and income in relation to the time frame of how long people can last financially.
So as you point out, we've got a duration mismatch, though as you can see, up until today with markets down aggressively, we've had a huge rebound because markets are focused on the liquidity side of the equation, not on the cash flows. Are you saying, Bob, are you anticipating that in the next 3 months, as this Band-Aid that was put on a couple of months ago starts to wear off, that we could hit another air pocket?
Well, you're just going to see an instant replay. Over, you know, every 3 or 4 months, you'll get the instant replay until governments run out of either the willingness or the ability to cover that gap. And so that becomes a very large uncertainty. And that's also different country by country.
So there you go, traders. That's the thing I want to share with you. The big picture, the massive big picture, as you can see by what he said here. Listen to what he said there. He said that the effect on, firstly, what he was saying in this video here, earlier on, he was saying that the government has done a good job right now initially trying to fill that pocket of the income that's basically disappeared from or that hasn't been produced in the economy. But what he's saying is that even though the governments have done a really good job of basically giving the money to the people so they can keep spending money to keep the economy going, he was saying only around 50 cents in a dollar that the governments are giving out is actually going back into the economy. So that's causing a slowdown and so on and so forth. And the next part here, what he was saying there, which just completely blew me away, and it's a great video, guys. If you type in Bridgewater CIO principle, or I may even I'll leave the link in the description below as well too. You know, it's a wonderful video to watch, guys, and I'm probably going to watch this probably 10, 15, 20 times because there's so much information just in this short video about the big picture and so on and so forth. But do you see what he said just there a minute ago? He said that this is going to be basically a repeat. The effects of this whole situation that's happened with the virus is an 18 to 20 month effect timeline. That's a couple of year time frame at least, right? And then what he said was that, but the stimulus that the government gives, which is only 50% effective in the economy, because only 50% of people actually spend the money, is only good for a good 3 to 4 months, and then the band-aid starts to get ripped off, and then guess what's going to happen? The government's probably going to come in and print even more money to try to keep the markets up. So technically, I'm seeing a massive shoulder formation on a technical basis, but now I'm looking at the fundamentals. They seem to be lining up where we're probably likely to get a bit of a drop in the markets. People are going to freak out. Government's going to come back in, try to support it again. We're going to rebound. Then 2 or 3, 4 months later, we're going to probably get the same thing, and so on and so forth, right? It seems like that's what's going to happen through there. Now, that's for the overall stock market there, guys. Individual stocks are going to be, you know, there's a lot of amazing opportunities, I believe, in some of the gold mining stocks. Are going to be amazing opportunities. I just believe there's a lot of amazing trading opportunities. If you're an active trader like I am, there's a lot of amazing opportunities there. But the big picture of this, as you can see, that yes, the government is doing what they can to keep the markets up, but as you can see, right, the stimulus and what's happened is only good for a couple of about 3-4 months before the band-aid gets ripped right off again. The markets go haywire again, and probably and then probably the government's going to step right in. But as you can see, what he was saying there just a minute ago is that it's probably going to be it's going to be a repeat for the next every 3-4 months for the next 2 years. That's crazy. Can you imagine the deficits? The deficits are going to be crazy. Not only the deficits, but the massive slowdown in the economy, because not many people are spending money, right? I saw a thing recently where the savings rate has absolutely spiked through the roof. Now, once again, that's just proof that only around 50 cents on a dollar the government's giving out to try to fill that void is actually going back into the economy. And I actually originally learned that from Mike Maloney's, if you go to Mike Maloney's Hidden Secrets of Money, I think it's episode number 7, he talks about that, which is really, really, really interesting. So guys, as you can see, right, the more you study the history, like I really like the Mike Maloney video, and the more you study, like, you know, what this video here is talking about, and you read the Big Debt Crisis, you can start to build your picture. You can start to see the picture clearly about what's going on, where we're going, and what's happening. And that's the reason why, guys, that's the reason why we're getting now a new world, there's going to be a new world order, because it's going to come to a point in time, right? If the governments have to keep printing money every 3-4 months to keep this thing going, there's going to be debt restructurings. Like, there's no doubt about that. This is really bad long term, right? What I mean by long term, over the next 2-3 years, right? After that, we're probably going to start another, as Ray Dalio says, we're probably going to start another boom cycle, and we're going to go from there, right? But over the next 2-3 years, that's That's why gold. I see things like mining stocks, gold, silver, like those different sectors, especially gold and silver, have been a massive sort of inflation period. Especially what's happening here with the whole thing here, guys. And you can just see, right, that the more they're printing the more they're printing the you know, it's going to be crazy. Now, the even worse thing, guys, is this. Right now, they're trying to fill the void and we haven't got inflation yet, right, from all the currency that's been printed. Why? Because a lot of people are saving. Now, a lot of people are saving money and a lot of people are not spending money. And and as you know, over the last 10, 20 years, right, you would know that the velocity of money, right, which simply just means this is the velocity of money here, right? Which simply means of how, you know, basically what people are doing with their money, right? How many times their money is actually being transacted throughout the economy. And you can see it ever since 2008, right? 2008 it dropped and we're just slowly going down and down. Now, there's going to come to a point, guys. There's going to come to a point where everything goes in cycles, right? Over the next 5 years, with all this printing of money and all the government doing whatever they can to stimulate the economy, as well try to keep the markets afloat, which is just creating that massive right shoulder. At some point in time, 50 cents on a dollar is going to savings. And so there's going to come to a point in time, as Mike Maloney talks in Hidden Secrets of Money number 7, that they're going to that people are going to start to feel safe again. They're going to come out and then start to spend. And then this velocity of money is going to start to pick up. Now, with all the currency or the money in the system right now, and then the velocity of money, that's going to skyrocket inflation. Now, I don't see that happening probably for another 2 or 3 years. I see a lot of bad things happening over the next couple of years. But with debt restructurings, and that's why, guys, that's what I've always said to my private clients, that over the last 20 years or more, the safest job that we've always saw is a government job, right? If you've got a government job, that's the safest thing. Even when I was a kid, right? It's like you've got to get a government job because it's safe. Well, guys, what happens when the government has to start the defaulting and debt restructuring and devaluing the currency and all that sort of stuff? What happens to people working at hospitals? What happens to people working, fire brigade, the policemen, teachers, all these government jobs? What happens to those? That's where, that's really bad, right? Because now the new normal, what was the safe of jobs, because it's, a government assisted, is no longer safe anymore. That's why this is really, really bad, guys. And now, and as you can see, right, I'm just doing my study, guys, and, leave a comment below and let me know what you think about it. But as you can see, guys, I'm just personally I'm doing the best I can to study this as much as I can. But I'm trying to study it with no filters. I'm trying to see things as they are and not worse than they are or better than they are. I'm just trying to see, okay, what is the truth about what's going on right now? I don't ever want to go into these markets blindly and go from there. Now, the good thing about this, guys, is that if you're a trader in these markets, this is going to present a lot of really good opportunities. It already has for me personally, right? When the stock market crashed and I saw the government start to do what they were doing, they started printing money, I knew there's going to be a flaw in there. I also knew that just by looking at the way people were, they were fearful in the markets. If I just bring this up through to here, when it comes to just say even the Dow Jones, I knew that when the government came out and said they're going to do a really big, massive stimulus package, which was around about here. Pandemic was by who? The government shut down by here. Most people, the fear meter was absolutely just really, really fearful. I knew at that time that there's going to be a bit of a flaw and we're going to get a bounce. And that's where, right here, I bought the SPY, I bought Apple, and these are options trades, by the way, and I also bought JP Morgan. SPY gave me a really, really nice return. Apple gave me a 230 something return. And I had a bit of I think it was a 30% loss on JP Morgan because JP Morgan didn't really do much. As you can see, if I go to my JP Morgan chart, You could actually see JP Morgan. I actually bought JP Morgan down here. It ran up, it ran down, but because I was trading options, the liquidity was just wasn't doing much, and so therefore, even though the market went sideways, I still got out with about a 30% loss because I was trading options there, right? And also I was trading out of the money options. If I traded in the money options, which is below the price, then I probably would have had a bit more safer mechanism through there. So as you can see, guys, right, like that's what we're seeing through there, and that's what's going on right now. And I just see this whole thing that's happening right now, guys. You know, and as I said before, like even with Apple, right? So what's happening right now? And if I just go back to say this screen right here, and I look at all these markets through here, it's not a coincidence, guys, that the stock market, that the charts are telling me, and they're actually saying right now, without us trying to get involved with this. And as I said before, this is going to present a lot of really good opportunities. But it's no coincidence, guys, that we're starting to get a bit of a rounding, a bit of a topping formation here, a bit of a lower high, a bit of a island reversal. We're starting to break down now, and especially what happened on Friday. It's not a coincidence, right? Going along with what actually happened through here, because what do they say? Every 3 to 4 months, we're probably going to see a repeat of things that happen. Now, I don't see like if I open up this chart here on the Dow Jones, I don't see this happening again, which it may, right? But as you can see, right, that this happened in March. This is 1, 2, 3. Now we're getting into what? This one here. Guess what? Guess what's happening right now? It's starting to wear off, right? Guess what's like going to happen to the stock market? Oh, we're going to do this. And then guess what's going to happen? The government's going to come back in and start to support it. It's probably going to do something like that, right? Now, the really interesting thing, guys, that I remember reading from the 1929, and let me see if I can bring up a chart here. And I want to bring up a chart of 1929. And here's the really interesting thing about the government stepping in and seeing if they can find a bit of a flaw in the markets. Let's go to here, and let's go to. I want to go back to 19. Can I go back to 1929? No, I can't. If you read Ray Dalio's. So the interesting thing that I was reading with Ray Dalio's. Let me actually just bring this chart up through to here. A brief history on 1929. Let me actually see, where is this chart here I was looking at? Not that one. Where is that? Just trying to find this chart, because the really interesting thing about like the whole government trying to step in and so on and so forth. Look at this massive head and shoulder formation as well too. That's what I believe we're building right now, but a bit more of a longer term formation. And then next year we're probably going to get a massive move on the downside. But I'm trying to find the. This seems like a really good article to read. I haven't actually read this one, so I probably will. But let me see if I can zoom in here for a minute. And I want to just share this chart with you because it was really interesting that what I saw coming into what the market's doing. Okay, here we go. Here, the interesting thing that I found about the whole 1929, right, is like, look what happened here with the 1929. This goes right along, guys, right along with. It goes, as you can see here, right? It goes right along with what the market comes up, has a bit of a flash crash in 1929. This almost looks like what's happening right now, right? It looks almost identical to what is going on right now. Let me see if I can zoom in a bit more, right? So you can see here, right? This is exactly what happened right now. Now, what does this look like? This period through here, right? This period through here, what does this look like? What's happening right now, right? Now we've had a bit more of an uplift, but do you know this is just a little bit more, and this is basically where the Dow Jones is. You know what I mean? Like we had a bit of a drop down and we rallied up, and then suddenly you can see here how we had all this major sort of resistance levels all through here. Actually, let me bring up a different color. Right? We have this resistance level through here. Well, all the stock market did today, in 1929, we had a bit of a massive flash crash first, and then we had a rally up. Well, guess what? All the Dow Jones did just recently was it just went up and up and up and up like that, right? So if I look at the Dow Jones right now, if I go back to the Dow Jones, let's say go back to the monthly charts or even the weekly charts, look what happened, right? Let me squeeze it up. Look at this here. There we go. Look at this. How awesome is this? Right, look at this here. Right, so we had a drop down. Remember, this was the resistance level here. We had a little rally up. We couldn't rally up, and then we dropped down. Right? I'm going to get back to what I was going to get to the point of 1929, but I just realized this, right? But look what happened here, right? We had a drop down. Where were the resistance levels? All through here, as you can see, all through there. And look what happened, right? We just rallied up to where? Just the resistance levels. Isn't that fascinating, right? But when we're talking about that, right, and we're talking about whole like if I talk about, like, if I look at this, all you can see, right, if I look at this here and I look at, say, market cycles and so on and so forth, if I bring this, let me bring this this chart up through here. As you can see, right, this is all this is, right? It's just the same thing happening over and over and over again, right? So if I bring this, let me see if I can do this. So if I bring this over to here for a minute, there we go. Right, so as you can see that this is point 1 to point 2. Point 1 to point 2. Point 3 is where? This is point 3 here. This is 1. This is 2. What do you think this is? Point what? 3. Isn't that fascinating, guys? Like, we can actually see that this is just playing out right now. And it's so like, it's not a coincidence, right? Like right now, on this weekly chart, guess what we're getting on the daily chart, right? The daily chart's now saying doing what? We've got on the daily chart, we have the gap up, we have the island reversal, we had a gap down. Now we're creating a bit of a lower high and we're rolling over at point 3. Okay? And as you can see what actually happened here, right? What did we do? We actually rallied down. We almost got the lows, and then we rallied back up, and then we started the stair step down. Now, the interesting thing about the 1929, right? It's the exact same thing that actually happened in 1929. What ended up happening is that the government came in and stepped in where? The government came in and stepped in right here, right? The government came in and stepped in right here, and then they found support, right? And then the market crashed again, and then the government came in and stepped in again, right? And then it found a bit of a floor, and they came in, and then they came in again. But even though the government came in to find a bit of a floor in the markets, guess what the market was doing? Lower high, lower high, lower high, lower high, right? So the market was going, even though fundamentally, yes, the government was coming in to find a floor, guess what? The overall trend was down. So the market was trying to come, the government kept coming in until we actually did find a floor. And as you can see, right, things started to change through here, which we probably got something like that. 1932, right? But as you can see, that's what's happening there. And that's what I do expect, guys. That's what I do expect what's going to happen here right now. So over the next probably couple of years, as you can see, this was 1929, but this actually went from 1929 into 1932. Isn't that interesting? That's 2 years. Really interesting, right? That the whole virus situation is going to have a lasting of what? 2 years. Isn't that a coincidence? I think not, right? Everything is just sort of, you can see it right now, what's going on. So there we go, guys. That's what I wanted to share with you with all of these, with what's going on right now in this here and the videos that I've been watching and the study I've been doing. This looks really, really, really bad, guys. And if you think that the government's just going to keep coming out to try to prop up this market even more, we're in a changing time right now. You know what I mean? We are in a changing time right now. And if I bring up, and if I go to my, I've been putting up a few charts to my community post here, right? So if you go to my community tab up here, so you can see the community tab here, then you'll be able to see these posts up here, right? So the first image that I put up here was this one here. And you can see here, right, that this one here, let me see if I can zoom in a bit more to get it, right? So you got basically the estimated profits and the actual stock market itself. You can see how it's going alongside and what's going on right now from there. I even said here that I said just another brick in the wall. You may be right, you may be crazy, but I can see the stock market going to fall. Fed gonna turn out the lights. It's too late to save it, but it's just not the same market as before. You know that song? You may be right, you may be crazy. And I said, "Love my dad loved that song." And then I also, let's see if I can go back here now. I also put up this chart here, which, as you can see, like, this is the actual corporate profits right now, and it goes right alongside, right, of what's going on right now, right? Corporate profits are dropping. Why? Even though the government's doing whatever they can to fill that hole, guess what's happening? 50 cents on the dollar is now going to savings. And so you can see what's happening here with the overall stock market. So this is and the equity value through here. And the last chart here was that basically the PE ratio, and then obviously the long-term run average. And you can see what actually happened here. Look at this. This is the tech bubble here. Isn't that fascinating? Look at this here. This is the actual tech in 2000. Look at this spike through here. Tell me this is not a bubble. And this is going to end really, really, really bad, guys. And I believe we're just in the starting of that right now. We will end up back down here somewhere. And guess what? When that happens, if we got back down to here in 1979, where is that? Let me see if I can zoom in. Let me see if I can zoom back out a bit. Yeah, so around 1973, 1979. Wow, that's 3 years there. That's where you can see stocks are very undervalued, right? And you can see normal values around that level there, which was actually around about that 2012 level anyway. So there we go, guys. That's what I wanted to share with you. Leave a comment below. Let me know what you think about this. But technically wise, guys, I've always seen that this is probably forming one big head and shoulder. But now I'm starting to see a lot more clearer picture of studying the Mike Maloney's and Mike Maloney stuff, Hidden Secrets of Money, by reading Ray Dalio's histories, by watching these videos and stuff like that. It's starting to see the facts of what's really going on and why this is really, really, really bad.